I was recently contacted by one of my alma maters, the University of Pennsylvania, in collaboration with Wall Street Prep, another institution I've learned a lot from in the past. So they've put together a new program called the Applied Value Investing Certificate that's offered through Wharton Online. The topics covered are really relevant to what I teach on this channel, so I wanted to take a few minutes to break down what the program includes and share my thoughts on who it might be a good fit for. The overall structure of this certificate is that it's an 8-week online course offered through Wharton Online. And they give these dates because this is like the next cohort, but once this one is done, then it becomes basically time that the next cohort will roll through. And so they give the estimate that it would take about 10 hours per week. And then they quote tuition of this much, 4,800 USD, but then they say this offer of basically if you sign up before this early registration, and for this enrollment, that date is this date, but if you're looking in the future at this video, then there will be a different early registration if you're looking at a different cohort. So then if you register early, you get $200 off, but they gave me the code Ryan300 that you can use, which would basically take an additional 300 off. So if you use that before this date, you'll get a total of 500 off. So let's go through and just walk through basically some of what you're going to see here. So I guess the general idea is basically that it's learning to identify undervalued stocks. I think that's really similar to a lot of what we see in the actual CFA program, with the ultimate goal being to basically identify like some sort of intrinsic value and then compare the real value. And then I think who would probably be most interested in getting this would be people that want to be hired into this industry where they want to work as a analyst at some fund or something. So here we see earn a globally recognized certificate. I think that that's probably one of the biggest value adds of this thing, is that you get to put like Wharton as something on your resume, and then that's something that's like immediately recognizable, and then you get this stamp from one of like the top schools on your resume. And then it's in partnership with Wall Street Prep, and I first became familiar with them because I did a master's of science from Texas A&M, and basically they partnered with Texas A&M when I was there, where we had this whole like boot camp thing where we had to do these like Excel shortcut tests and stuff that like investment analysts would do, and they sent some instructors and like a bunch of material, and we had to learn, and then we had like this like team-based challenge. So I've became familiar with this company basically all the way like 9 years ago. So it's pretty cool that they, reached out to me to partner in collaboration with the university that I attended. And then one thing that's interesting is we see some like big names involved with it. So the program directors are all either from Wharton or from Wall Street Prep. But then the other interesting thing is like a lot of these keynote speakers are from some big funds that you might have actually heard of already in the past if you're like familiar with this world. And I'm thinking this is partially why the tuition is what it is, because like a lot of these people probably earn like a pretty penny from their day job. So to get them to spend time on something like this, you probably need to incentivize them to come and, share this knowledge with this program. So one thing that's interesting about it too is that it says it's basically self-paced, meaning that let's say like you're expected to do 8 to 10 hours each week. In 1 week you can't really do it, then maybe the next week you can make it up by spending like 20 hours on the next week. Then it's saying that this is the same training that would be used by like institutional investment firms. So I think the end goal, like if you were to get a certification like this, would be to work at a firm like this. And I also feel like that because of it saying that you're going to learn to do real world stock pitching, and if you're trying to pitch stocks, you would definitely want to basically be on in an institutional firm, like most likely on the sell side, but also possibly on the buy side. And then here I think is probably one of the big value adds is just getting the certification like on your resume and on your LinkedIn with like Wharton and University of Pennsylvania's logo right there. So the one thing that I feel like a lot of value is derived from like these Ivy League universities is because of like the exclusivity of it. But then things like this, where it's not really exclusive, it's more like who signs up, could get like some of the value could get lost in that. But one other thing to consider is that like not everybody also even knows like whether it was like application based or like self sign up. And I've also been thinking lately that like a lot of the systems that you apply through for jobs nowadays have like these AI agents that decide basically whether your resume gets like moved along or passed. And part of that is like what universities are even just listed on the resume. So it's just I guess maybe a kooky theory that having like a Wharton listed on the resume could like bypass some of these like AI filters to just even get your resume into the hands of recruiter. Anyways, maybe you guys can let me know what you think of this like theory that I've concocted in the comments. And then this is what I really wanted to look at, the program curriculum, just to see what it actually covers. So let's see. First one is module is Introduction to Value Investing. So history of value investing. Bet you're going to talk about Warren Buffett. Okay, fundamental value investing. Explained introduction to relationship between price and value. So price would be the actual price in the market, and then value would be what you're trying to figure out. What's the intrinsic value? And then probably I would bet, yeah, here's a whole module on intrinsic value and like how you're going to try to determine that. And then basically what you're trying to do is say like, hey, if intrinsic value is above the price currently, then that's likely going to be a buy, whereas if intrinsic value is below the price currently, that might be a sell. So let's keep moving along. So now module 2 is getting into market efficiency, stock price movements, and market mispricing. So this idea of market efficiency, like some people believe that markets are super efficient. These would be the type of people that are like, all you should do is just invest passively, hold purely passive investments, and then because there's no point in trying to outperform the market because it's so efficient, that only invest passively. And then you would end up with a portfolio that's like basically just all in ETFs or like passive index funds. But then there's another crowd that's like, if you get some sort of informational advantage or do better analysis than other people, then you can do a better job of basically figuring out what should this intrinsic value be and then make active decisions, or have other people pay you to manage their money and then make active decisions. So the reason that a certification like this would even probably exist in the first place would be there's enough people who don't think the market is perfectly efficient, and that you can learn things to make better judgment calls than just investing passively into some broad index ETF, and then hire someone with this certification to work at a firm where they give their money to the firm to have that person invest it to hopefully generate alpha above the passive index. And if you're interviewing with a financial institution that manages money actively, you probably shouldn't say that you think the market is efficient, because a lot of their business model is based on the market either not being efficient or other people believing that it is not efficient. And here, this market mispricing will just come back to the idea of the, if there's some difference between these two here. Let's move on to module 3. Okay, so tying back, intrinsic value is what we think the price should be, not what it actually is, which was introduced up here. So how would we determine what is the intrinsic value? Well, there's like all these different models that you can use to estimate the price that are going to be based on the earnings per share or some sort of dividend discount or discounted cash flows, stuff like this. If you're already a CFA charter holder, you're probably very familiar with all of this stuff. So I think for someone who already has a CFA charter, a lot of this would be probably just redundant in some ways. Maybe the value would still be to try to get Wharton, just the certification from Wharton, on your resume. But I think that this would be more of a benefit to someone who might be starting the CFA program now, who's getting introduced to all these things and like learning about it in tandem, or someone who's not in the CFA program at all, who wants to learn about these things and break into the industry. Now, it seems like from moving from module 3 onto module 4, This is where it's getting purely into this institutional level value investing and moving away from things that even just retail traders could use, or retail investors, I should say, and looking at things that you would use if you worked for an institution. So let's see, we're looking at the process of IPO. How does a small private company eventually become a public company? Fundamentals, expectations, valuation, building, forecasting, architecture. Let's see, what else would be interesting here? Looks like a lot of it is about how to basically do a deep dive on a specific company. So it'd be like looking at comparisons to other similar companies, doing a deep dive, looking at the earnings, the discounted cash flow, how to look at the company reports. So this is really like Warren Buffett type of stuff. Like what he's really famous for is just diving into the fundamentals of a specific company, including their company reports and financial statements, and trying to get really deep in the weeds to come up with some sort of intrinsic value about that company. Now it looks like Module 4 just continues that one. Now we're getting into some sentiment analysis. So what is the general sentiment surrounding a specific company in the overall market, evaluating insider buying. So a lot of times you'll see before some big piece of information is released, a lot of movement happens in the stock before that information even comes out to the public, and you can see that it moved in the direction that it would have moved had they had that information. So you can see that there's some sort of information leakage, and this like price action is happening before everyone else has that information. Then you're looking at assessing the competitive advantages of a business. So this is getting into the idea of a moat, if you've ever heard of that. So some would say, like right now with AI, NVIDIA has a big moat because they're the one selling like 90% of the GPUs that are used for artificial intelligence. So this is a huge value for the stock to have this ability that no other company currently has. So they can benefit from a more lucrative valuation than other companies that don't have the same competitive advantage to others in their space. And then continuing off that, impact to barriers of entry. So like with the example I just gave, obviously the barrier of entry is super high if there's really only one company that is like properly providing this good or service and nobody else is really able to break in. Better valuation. Then what's our return on our invested capital? Now we get into growth, risk, and uncertainty. So everything is really based on growth. Like higher growth companies are going to have higher valuations because we expect higher dividends in the future. But one thing we also have to consider, aside from the returns that an investment is offering, is what is the risk? Typically measured by what is the volatility of the assets, and along with this risk comes uncertainty that we could have massive decreases in the price of this investment in short periods of time. Now, this is really getting into the whole picture once you consider risk along with the returns and the growth of the stock. The next module is process-driven value investing. We're looking at efficiency and time management during research, a system for effective information management. Okay. So this is just getting into like if you worked in this field, how could you do the job more efficiently, it seems. The sniff test and how to fish where the fish are. So this is like a famous Charlie Munger quote about value investing and investing in good companies. And finally, the 90% rule of idea selection. So this idea, I think, is basically that 90% of ideas are just bad ideas. And so only 10% will be good ideas. But you have to, actually write down all your ideas just to find the 10% of the ideas that are actually worth pursuing. And then that might apply to like companies, like maybe only really 10% of the companies are great diamonds in the rough that you would want to invest in. And finally, considerations for investment professionals on the buy side. Buy side career trajectory. So it's talking about that. So it looks like it is gearing you up more towards a career on the buy side. So then let's see, pitching a stock. So this module focused on taking a stock thesis and communicating it to others. Students will learn how to present an idea to audiences, including portfolio managers or other investors. Okay, that's interesting. So basically, yeah, it's positioning you for a career on the buy side to be pitching stocks within some sort of institution that's managing money. And then finally, talking about the active management ecosystem, so how to probably find a role within that space. And then it says the applicant profile is for individual investors managing their own stock portfolio. Yeah, I think it would be, useful for that. Like, certainly some of these things you're learning would be useful for someone managing their own portfolio, absolutely. But I'm not sure I would go exactly for that, because I think a lot of the information is probably available in other like cheaper forms if you want to go out and find it. I think the thing that would be more useful is, this investment advisor seeking to better serve clients, aspiring hedge fund analyst seeking to understand institutional grade value investing, and anyone looking to learn to invest money with an institutional lens. So I think it really serves the purpose of these people that want to work in this space, because I think ultimately what you want is something prestigious like Wharton online on your resume. So I think ultimately who it serves the most is people who want to work in this space and break in, because I think a big value of the certification is just like having it on your resume as like a stamp of, look, I have this big institution like Wharton stamping that I know this information. Here's an interesting breakdown of the applicants' career levels. So we have actually more people than I would have expected, like 24 or less. And then looks like the bulk of the people is going to basically be between 25 and 39, which is pretty much exactly what I'd expect. Let's see, applicant industry distribution. So a lot of people are already working in this space, 21%. I would have thought, okay, this makes sense. It looks like basically, I'm trying to do the math in my head, but like a little more than half is also already working in the space in these three buckets. And then this would be people who invest their own portfolio, but I assume that they probably want to like work in this space if they're taking this program. And then these are, I'm thinking, just all people in different spaces that want to break in to work in this space. Okay, and these are the top roles that the applicants hold. So everything on this list makes sense to me. These all seem like things you might do, with this type of certification once you're done. Except like the individual investor is like you're managing your own portfolio, and that's the one where I was thinking in that case I would probably like seek the information like elsewhere. But if I want to work in this space and end up with these roles, then I probably want that like stamp on my resume. So if you're interested in this program, you can follow this page with the link in the description or the pinned comment, and you can use my promo code Ryan300. That will give you $300 off if you apply after the early deadline, and then $500 off if you apply before that early registration deadline.